Hey everybody, welcome back to SEC Roundup. I'm Nick Morgan, the co-founder of ICAN, Investor Choice Advocates Network, and the co-host of today's episode. I'm pleased to be joined by Rodrigo Seira, who is special counsel at Cooley, and I'm proud to say is a ICAN advisory board member. And I'm also proud to point out that he is wearing the ICAN hat. So Rodrigo, thank you for joining us. Capital markets are not just for fat cats. Thanks for coming.
Thanks for having me, Nick, and thanks for the hat.
You're very welcome. And of course, we're joined by our special guest today, Miles Jennings. Miles is head of policy and general counsel at Andreessen Horowitz. And Miles, thank you for coming on the program.
Thanks for having me. Looking forward to it.
So the reason we're getting together is because you, Miles, Andreessen Horowitz, and the DeFi Education Fund earlier this month submitted a letter request to the commission, or more specifically to Commissioner Peirce, requesting the SEC consider a safe harbor for registration from broker-dealer registration requirements. We'll get into the details of that for a minute. Thought it was extremely fascinating. You both were, just sort of to set a little bit of context, you both were recently guests at a SEC Crypto Roundup. Obviously, you both have spoken very articulately on the regulatory issues surrounding digital assets. Rodrigo, let me start with you and just ask the question. So the request here is to be exempt from or have a safe harbor from registering as a broker. But who cares? We already know, the SEC told us last year, they have forms. You come in, you fill out the forms, and why is this an issue at all?
Yeah. So I think the prior administration created a lot of confusion in this area by really trying to use BD regulations to, engage in lawfare basically against crypto and really stretch their jurisdiction in this area to past its limits, I would say, right? They ended up suing a couple of wallet providers and other crypto projects on the basis that they were operating as unregistered broker dealers. Now, the current administration dropped those lawsuits and ultimately I think they would have lost in court. But this created, I think, a lot of confusion in this area. And in a way that I think is unnecessary, right? Broker-dealer regulation exists to address specific, agency issues that the Miles' letter gets into, and those simply are not present in many of the instances where the SEC was trying to expand their jurisdiction, right? So what's the downside to just coming in and registering, right? I think there's a few. The first thing is you're forcing developers into these, Procrustean, to get into my Greek mythology, regime that doesn't really make sense. It's going to impose a bunch of costs on companies. It's going to force a regulatory regime on them that is unworkable and that doesn't really help the consumers, right? It would, I think, create a lot of uncertainty for other actors in this space, in an area of law that is, very important to our capital markets. Everybody with a website now has to figure out whether they're all of a sudden a broker dealer. And then it would distract the SEC, which is an agency that has limited resources and a really important mission, from doing the work that they're supposed to do, right? So I really think that there's a lot of downsides in expanding this regulatory regime and for no good reason, really.
Yeah. Well, and you touched on a theme that comes out in Miles's letter request, which is the uncertainty around who needs to register as a broker dealer. So I think part of, and Miles will let you talk about the motivation there, but part of this is just like, let's figure out who does and doesn't need to register. And I know the industry successfully sued some rulemaking that the prior SEC administration did around requiring registration as a broker. That proposed rule is now dead. Other people outside of the digital asset space have a similar concern to what you just articulated, Rodrigo. People who have been sued for being unregistered brokers, the immense expense and regulatory requirements, becoming a FINRA member, for example, make it very cost prohibitive for any small players to need to register. So, well, with that context, thank you, Rodrigo. Miles, tell us about this request. What does it request specifically? Who's it for? And maybe you could let us know, how is it different making this request in 2025 to Commissioner Peirce as opposed to conversations, that did or didn't happen in prior years?
Yeah, sure. So I think, just as a starting point, I think we approached this and a lot of the policy efforts, from the principle of look, where there is, same activity, same risk, then the same rule should be applied. Where there is, similar activity, but different risks, then you need different rules. And it does not make sense to apply the same rules in that context. That is just regulation for regulation's sake. In response to what we've seen, the administration right now has come out. The working group report that the White House put out, called for modernization of securities laws in order to facilitate the movement of our capital markets on chain. Right, there's a lot of efficiencies to be gained there. The SEC, Chair Atkins launching Project Crypto in kind of an incredible, broad, sweeping speech that kind of signals, right, that we need to be moving forward and trying to bring our capital markets on chain. So this is just in that vein, right? And looking at, okay, where are some of the efficiencies that can be gained, through the way that this technology functions? Obviously, keeping in mind what are the, the risks that the regulations are intended to address. And so, the proposal that we worked on with the DeFi Education Fund was to basically just to provide, trying to provide clarity for entrepreneurs that are building these systems so that they can understand, what are the criteria that they need to hit in order for their, application to not be, subject to broker registration. Now, I think that necessitates, right, that you look at, okay, what are the risks that broker regulations are trying to address? And historically, what is the reason that we've required, certain intermediaries to register as brokers? And then kind of mapping out that criteria in the context of how these DeFi systems function and showing where, they can eliminate those risks that the regulatory scheme is trying to address. And going back to the principle I outlined, right, where the activity is similar, but the risks are different, right, then we should have a different regulatory scheme. So that's really kind of the context of what we're proposing here. I can get into the details more later. I think to go to your question on kind of the environment, though, I would just say, as the president's working group, the SEC is clearly looking to be constructive. It's just a completely different environment than what it was a year ago, right? I think, it's very hard to take a high level view at what the SEC was doing over the course of the last 4 years and come to a conclusion that it wasn't just trying to ban this technology from existing in the United States. Obviously, that's not a very effective approach and didn't prove to be very protective of investors or consumers. And so this complete 180 and desire to, bring the system into and the technology into the regulatory perimeter and established pathways, I think is very welcomed by the industry. And it's exactly what we need in order for this innovation to really take hold.
Yeah, I agree. And one of the things I liked about your proposal that I think even people outside of the digital asset space could appreciate is it's a safe harbor, and it's like a checklist. If an app creator does not do this, and this, they will be deemed presumptively not to be a broker. I mean, a lot of people could use a checklist like that. If you go look at the multi-factor test that the SEC currently uses, just forget about the digital asset space to determine who's a broker. It sweeps in all kinds of people. And so I appreciated the clarity of your sort of checklist approach. I certainly hope it gets adopted. There were a number of issues that you said sort of identified as, look, if an app producer doesn't do these things, was there a reason you picked the things like custody, for example, was a big one?
Yeah. So I think really there, right, it's trying to kind of highlight like what are the key risks, if you look at all the case law on brokers and like what are the key risks that this regulatory regime was trying to address, right? And then identifying how, DeFi systems can address those risks. Now, not all DeFi systems are going to address those risks, right? There are many different flavors of DeFi, and some of them, are just pretending to be DeFi and are not actually DeFi. And so where those systems are introducing the same types of intermediary, type risks, risks relating to custody, risks relating to conflict of interest, right? Where they're introducing those risks, it's very hard to justify that you shouldn't be subject to the same, types of rules just because you're using a blockchain. That is not a principled kind of perspective, right? So the element, and I think that the key thing that you need to identify in kind of creating this, this checklist, right, is like, okay, if you meet these criteria, do we have a pretty good idea that you will have eliminated the risk that brokers typically introduce into their, customer relationships? Now, I think one of the things to highlight, just taking a step back on that approach, right, is that by their very nature, securities laws are substantive and not formalistic, right? And that is very important because ultimately, if you create very formal rules, that then anyone can just kind of circumvent them but achieve the same ends. And so this is not meant to be a, if you kind of check all of the boxes here, you are 100% guaranteed. But this is to try and signal to entrepreneurs, hey, if you check these boxes, there's going to be a very strong presumption that you are not engaged in the type of activity that would classify you as a broker. And that, I think, is the right kind of balance between, substantive like approaches and formalistic approaches. Formalistic approaches do have a benefit in the sense that they are easier to apply, and that can make it easier for entrepreneurs and help foster innovation. At the same time, right, you do want to leave some subjectivity in the hands of regulators so that they can, the system can evolve, they can take on new edge cases and really kind of develop the law from there. So we're trying to strike a good middle ground here, and that was, the approach that we generally took with the criteria that we outlined.
Right. Well, I hope the SEC picks it up and goes with gusto and moves forward with it. My understanding is we have not seen from the Atkins SEC their rulemaking agenda yet. And normally the spring one comes out in May or June. So obviously it's not spring anymore. Hopefully we'll see their rulemaking agenda come out in time for the fall. And hopefully this will be on it. So we wish you luck, and we'll maybe check in and see if you had any progress in the coming months. In the meantime, thank you both for coming on. And for everybody else, if you want more information about ICAN, we're at icanlaw.org, and we'll see you on the next SEC Roundup. Thank you.